As predicted, the Reserve Bank cut interest rates today. I mean, obviously, if you've got a mortgage, it's going to be good news for you. If you're an older retired Australian with an account in the bank relying on interest, probably not such good news. That's the third cut after July's shock hold. That was something no one saw coming. So here to tell us what this impact might have, but more importantly, when you might get this interest rate cut, is Data Insights Director at Canstar, Sally Tindall. Sally, great to see you again. Is this the kind of cut that, you know, you're actually going to go to your bank and say, right, I've held on for the previous two, this is number three, my cost of living's not got any better, I think I need to pull my interest rate back to put some money in my pocket?
Oh, look, Steve, I think certainly some people will relook at their monthly repayments and think, OK, I might pare them back a little. What I'd be great to see is that some people look at their monthly repayments and don't drop to the absolute minimum, but just get a little bit of relief into their budget so that they can pay the other bills. Interestingly, when you look at the big bank data that's come through in the last two cuts, you know, the vast majority of Australians with a variable rate mortgage, particularly for those banks where they don't automatically drop your minimum monthly repayments, they're actually opting to stay on higher repayments. They're getting ahead on their mortgage. They're building up a buffer in that mortgage and hopefully kicking their mortgage to the curb years earlier if they keep that up. Time will tell though, because cost of living pressures, you know, inflation might be decelerating, but prices are not coming down. Cost of living pressures is still very real.
So there's actually data that can show you how many people stay on the rate that they existing rate and don't pull it back. And I guess if enough people do that, it doesn't then add to the inflation figure, does it? I mean, this is a really tricky roundabout, but if you can possibly afford it, do it.
It is a tricky roundabout, especially for the RBA that's trying to actually encourage a little bit more spending in the economy. But no, by and large, Australians are choosing to pocket those savings for those that have a mortgage. But we actually see it on the other side of the coin where people with savings accounts, they're actually putting money in the bank still as well. Money in the bank from households, it's at a record high. Money in offsets, also at a record high. Extra payments are elevated because Australians have been through a wild roller coaster of the last, 3 years. And what we know is it's so important to have your finances in the best shape possible. It is actually fantastic to see from where I sit because we are laser focused on continuing to keep our finances in shape rather than spending that extra cash at the shops.
Watching Ross Greenwood this afternoon, I mean, I think a lot of people understand that there's no compunction on the banks to actually pass this on. But last time, in the last rate cut, I think they did it within minutes or within a couple of hours, certainly a couple of days. Has anyone moved yet? You are always the one that has the first news on any of these banks who are moving quickly.
Well, let me tell you, Steve, it did take a little bit longer than previous announcements for the big four banks to step up and announce it. But that, yes, they have now confirmed that all four are passing this cash rate cut on in full to their variable rate borrowers. That is as it should be. I guess there was a little bit of interesting change there with NAB because you've got CBA and ANZ passing it on in 10 days' time. That's what they typically do. Westpac passing it on in 14 days' time. That's what they typically do on the way up and on the way down. NAB changing its strategy. Used to be passing it on in 10 days' time, is now taking 13 days to pass that variable rate cut on to its borrowers. I think that'll just frustrate a few customers. 3 days, I mean, what's 3 days in the scheme of a 30-year mortgage? But it's enough to just annoy customers, right?
Absolutely annoy them. And you need to contact your bank, though. It doesn't automatically taken off your, it doesn't automatically come down, does it? You've actually got to either get online on your banking app or go to your bank and say, righto, I want to bring it back to what the cash rate is right now.
Yeah, that's exactly right. So when the bank announces that they're passing on the cash rate cut, your interest rate, that will automatically drop in 10 days or 14 days' time, whatever your bank has as its settings. But 3 of the big 4 banks do not automatically reduce your minimum monthly repayments when you're on a direct debit. They actually keep it at the same amount unless you contact them. Now, I think when looking at the statistics where the vast majority of variable borrowers from those banks, opting to keep their monthly repayments the same. I think some of them don't realise that they actually need to contact their bank in order to get that relief into their bank account rather than their home loan. It's sometimes it's for CBA, ANZ and NAB, and it's sometimes as easy as just pressing a couple of buttons on the app. Certainly that's the case for CBA, and NAB is introducing that feature from this rate cut onwards. But again, I don't know that every borrower from those banks knows that that's what they actually have to do to see the relief in their bank account rather than the relief going into their mortgage as an extra repayment.
Now we're down to this rate, 3 cuts so far this year. Most economists, and I'll get your view on it in a sec, thinking there might be another 1 or maybe 2 this year. Is that going to be enough to stimulate the market, as in young people's thinking, righto, it's not going to get much better than this? Because I think traditionally we're at about the rate where it normally sits. I mean, we had that unusual situation, during COVID where we got down to basically 0, but we're at about the historical normal rate. So if anyone's got the deposit, is this the time where they should be putting their hand up and saying to their bank, righto, I'm ready to go?
I think a lot of people will. I think that this third cash rate cut will put a spring in the step of lots of would-be buyers out there that think, OK, time to take myself off the shelf and back into the property market. Unfortunately, what it does is then fuel property prices, because people's maximum borrowing capacity gets a very small boost on the back of each rate cut. It's about, for the average person on the income, a person on the average income, it's about $12,000 per cut. But it's, all the same, that means that they then can go to an auction and put their hand up and bid a little bit more. And, the likely person that's going to benefit from those cash rate cuts is probably the person selling the property. So there's no perfect time for people to be jumping back in, but I do think some people will be encouraged that the tough days of significantly higher interest rates are now behind us. Now, the RBA, there was extensive discussion today at its post-meeting press conference about the neutral cash rate, whether the new setting of 3.6% was restrictive or whether it was sitting near neutral. The RBA governor would not really be drawn by all of this chatter. She said that the neutral cash rate sat anywhere between 1% and 4%. Well, that's a huge range. Ultimately, they don't know whether we'll see more cash rate cuts, but the door is most certainly open should all the forecasts remain on track and inflation continues to track down to that midpoint of the target band at 2.5%. I think, look, you would say it's highly likely that we'll see at least 1 more cash rate cut this year. That's certainly what all 4 big bank economic teams are forecasting. Their prediction is November, which makes sense because that's the meeting after the next round of quarterly inflation data falls.
Great stuff, Sal. Thank you very much for joining us. Appreciate it very much.